So here's how the program works. When you get into a lease purchase program, you're going to sign 2 lease agreements. The first agreement you sign is an independent contractor lease agreement. That's where you lease your truck on to P&S Transportation. Then you're going to sign a lease purchase agreement, and that's where you actually lease purchase your truck. That document lays out what your truck payment is, how long your term is, and the other ins and outs of the program. You're going to receive 70% of the line haul revenue from each load that you haul. You'll also receive 100% of the fuel surcharge from each load. We also give you a weekly settlement for every week we have enough money to pay your bills, and we give you 100% of our fuel discount. You'll also get a company fuel card as well, and that's how you'll have access to our fuel discount. You got to have physical damage insurance when you're a lease purchase contractor, and our physical damage insurance carries a $1,000 deductible. You need to keep that in mind. You'll receive your truck at what we call trade terms. That means that tires and brakes are going to be at least 50% or better remaining on their life. There's going to be no major body damage over $500. There's going to be no broken glass. All the lights are going to work. Everything in the truck's going to be functional. It's not going to leak oil, not going to leak air, not going to leak water, and it's going to have a recent DOT inspection. Some of our trucks have remaining manufacturer's warranty on them as well. You'll need to check with our maintenance department to see if that applies to you. I mentioned a little earlier about an escrow account. A lot of drivers have questions about that. Essentially, an escrow account is a maintenance account that we use to pay your maintenance bills. We calculate our escrow pretty easily. We take 9.5% of the line haul from each load that you haul, and we stick it over in your escrow bucket for when maintenance items pop up. For example, if you produce $3,500 in line haul in a given week, that's going to be about $330 that goes into your escrow account. The next thing we need to talk about is recurring charges. Unfortunately, you're going to have to pay for the truck, so we need to talk about what it's going to cost. Most truck payments run between $475 and $525 a week based on age and mileage on each of these trucks. The average term or number of weeks for a lease purchase program is between 150 weeks, which is about 3 years, and 250 weeks, which is about 5 years. The balloon note at the end of the terms generally run between $1,000 and $2,500. So that gives you kind of an idea of what you're looking at. Older trucks have shorter terms. Newer trucks have longer terms. Now, in addition to your truck payment every week, you're also going to have your escrow payment, which we just established was going to run about $330 to $400 a week, depending on how much revenue you produce. On top of that, you're going to have workman's comp insurance that will protect you in case you get hurt on the job, and that runs about $35.61 per week. Finally, you've got a TransFlow fee you're going to have to pay every week, $3. In addition to your weekly fees, you're going to have some other fees that will hit your payroll once a month. You've got bobtail insurance, which protects your truck if you're not under a load, costs about $30 a month. You got your Qualcomm fee, which pays for the Qualcomm service. That's $65 a month. You got a Best Pass, which runs $15 a month. And you got physical damage insurance, which runs between $200 and $250 a month. Those 4 charges are going to come out of your first pay settlement for the month period. So keep that in mind when you're talking back home to the family so they know that that first settlement is going to be a little lighter than the other 3. On average, you're going to spend between $850 and $900 per week in fixed cost. In addition to your weekly and monthly charges, you're going to have a couple yearly charges that you have to pay for. You're going to have to get a tag and a cab card every year, and those average about $1,500. When they're renewed, generally speaking, our drivers have enough money in escrow to pay for that. You also have to get an IFTA sticker and a HUT sticker every year. Those run $17 and $19 respectively. Also, every July, you've got to pay your federal heavy highway use tax or 2290 tax. That runs $550. Then a one-time charge you're going to have to pay is for an air cuff lock, and that'll keep your truck from getting stolen if you leave it unattended. One thing we need to talk about is how you get paid in relation to how a company driver gets paid. When you get on a lease purchase program, you're going to have to pay your expenses up front, so you get paid a little differently. As you can see on this chart, an earning curve for a typical company driver is very flat. It's going to start at 0 every week and go up at a 27% rate the more freight you haul. So for example, if you haul 2 loads, you'll get 27% of those 2 loads at the end of the week and you don't have to worry about it. Well, as an owner-operator, you start every week in the hole, and you've got to dig your way out of that hole before you even get to even money with a company driver. The upside is that once you get your fixed charges paid back and you pay back your fuel, your paychecks can take off. The most important thing to remember is the magic breakover point generally happens around Thursday. The 2 most important days in an owner-operator's week are Thursday to Friday, Friday to Monday, because that's when the loads that you're hauling are putting the most money into your pocketbook. It's important to remember that because a lot of times drivers want to get a load that picks up on Thursday and delivers Monday. And the problem there is you're losing 1 day of work for a load that's just sitting on the trailer. If you've got a 650-mile load on the back of that truck from Thursday to Monday, you're not doing yourself a good service because you're missing out on a full day that you can be out making revenue. And a lot of times what you do from Thursday to Friday and Friday to Monday is the difference between a $1,500 paycheck and a $2,500 paycheck.